Hello, everyone. I hope that you've had a wonderful weekend. I hope that today was good for you. I actually hope you don't trade, but of course, I know some of you guys traded already, and probably made profits. Some didn't. Either way, it's okay. As long as you use risk management, it's fine. Right? We're not here to win everything. We're here to win more than we lose. Right? We're here to beat or lose in trades. That's what we are. We're professional risk managers, right? That's what it is. We shouldn't be in a rush. You shouldn't be in a rush because why are you rushing? You have no need to be rushing, right? And I know that sounds a way, but that's just, the truth. Right, so on my screen right now, you guys can see, hold on, let me make sure that it's recording. It is, okay, that's good. On my screen, you guys can see the economic calendar, right? And I posted on WAP, so if you're not on WAP, I would urge you to go on WAP, right? There's an app, a mobile app. I've heard like 10% of you guys complain about it. I don't have any complaints myself. And of course, it will be getting better over time, right? It's new. It's brand new. Like we're like one of the first, group of people to be on that app, right? They literally fast tracked everything for us. Literally, right? I had a meeting with the CEO. I talked to, the technicians and the coders, all of those people that work with WAP. And, they're great people, in my opinion, right? So, yeah, that's that. We will be making changes, and most of the changes will be coming from the inputs or the criticism of you guys, right? So if you don't like something and they're literally in our chats, they see what you don't like and they just change it, just like that, right? Currently, they've built something kind of solid so far, and it's working. So let's stop talking about that and let's go straight into what you're here for, right? On the screen, you can see the economic calendar, right? Monday, no news events. Tuesday, no news events. What does that mean, right? You can see that I opted to not live stream yesterday. Why was that? I did not expect volatility, and I did not even expect sequential SMT, right? I did not expect any expansion of price today. Why is that? You're telling me that there's a way that you can know if SMT will form or not. Of course there is. I don't know why I just told you guys that, but we'll get into that. But yeah, today we had no, large input of volatility to the marketplace, right? There's nothing like that today. There was no movements, no large movements. And this is mostly due to the fact that we have, the index futures at all-time highs. Usually whenever prices like this, the volatility is low unless we have, high impact news events like CPI or FOMC, NFP, which, there's a particular, way to know when the SMT divergence for non-farm payroll is, high probability when it will reverse, we're literally just, counting the time that it took to, run liquidity or absorb liquidity, right? And we will get to that. So yeah, tomorrow, well, if we're looking at, quarterly theory is already Tuesday, right? Because the days begin with the Asian session, right? So Tuesday, which is the upcoming trading day, you can see on the screen that we do not have any, news events whatsoever, no high impact news events, right? USD high impact news events whatsoever. And this is due to the fact that we have, CPI on Wednesday, right? That will be the, volatility for the week, right? There will be a lot of volatility then, and it will, be evident in which direction price should go if we have, sequential SMT, during the, 90-minute cycles or above, right? And this is important right now, what I'm saying. And the lower the cycle that it happens before CPI, and this is specifically for CPI, right? The lower the sequential SMT happens before CPI, the larger the expansion would be, right? So today we did not expect volatility. Did we get volatility? No. Tomorrow, still we don't expect volatility, right? And this is not, normal, per se. This is not completely normal. There are times, of course, when you have, volatility before CPI during the week, but that is usually on Monday, right? When we have the Monday expansion model, right? Whenever you have, a cracking correlation between the high of the previous Friday and the current Monday, right? So that would be sequential SMT. And that would usually happen. This usually happens in week 2. We have either, expansion on Monday, or there's nothing on Monday, then nothing on Tuesday, then we have expansion on Wednesday, right? But Tuesday is usually that day where, you don't really do anything, right? So yes, Tuesday we will more than likely have the high low of the week form on Tuesday. There will be a lot of volatilities, right, on Tuesday, and if not Tuesday, my bad, on Wednesday for CPI. The high and low of the week will, more than likely form on Wednesday. And for some asset classes, right, which, this will reflect in price, where we will have sequential SMT between Wednesday and Thursday. We'll have the low and the high of the week form on Thursday. And then Friday, we will have, price, you do what it usually does, return within the range, which is, very important, for week 1. So the range of week 1, like, this is something that you guys need to know. Usually you have the first 4 days of the week, right? It will expand, contract, return within the range, expand, or it will just keep going, right? But due to the fact that we have non-farm payroll, right, on the first Friday of every single month, right, whenever we have a full week and NFP falls on that Friday of that week, of week 1, it's very easy to know what to expect, right? And why is this? It's the function of Friday. The function of Friday is to return into the weekly range, right? That's what Friday is for price to return into the weekly range, or attempt to do so, right? And in a way, you can say that Friday, more times than not, will form the high and low of the week, right? Because the week will have a high and it will have a low, right? It's not just a high of the week and then that's it. It will have a low before it has a high, right? You can have the high of the week form on Wednesday, and then you have the low of the week form on Friday. Isn't that true? Yes, it is. So now, right, we will look at the Forex triad. Currently, right, we had expansion last week. Crazy expansion, right? non-farm payroll cover the entire weekly range and more. Even, some of our, within the US dollar, we cover the entire weekly range and the one before. Look at our price right now, and this is specifically for non-farm payroll, right? And, this week, right now, we're focusing on week one, right? So Wednesday, we will, reflect upon what we're talking about right now, right? You can see that here, what do we have? You can see that we have SMT right here, but it's not sequential, I know. But how could we get this to be high probability right now? First of all, you need to understand that non-farm payroll, and sometimes CPI, sometimes even FOMC, but FOMC, this happens, less time during FOMC than CPI and non-farm payroll, right? So now we're talking about the news events that they tell us that we should be scared of, right? We're talking about the news events that we're taught, that they tell us to don't trade. You can't trade this. It's impossible to predict the movements of, the volatility that these news events bring. You can see that here, this is just a wick, right? And now we have capital.com, and we will actually, reflect upon capital.com's data for the US dollar index and TVC, right? Something that we've taught already, like 2-3 months ago, I believe. Right, so here you can see that literally, and you can check this for yourself, right? Within the first 2 seconds, right, this wick formed. Do you understand? And this is important, right? Because if this took more than 5, seconds, it would be different. So this right now is very, very, very high frequency. Right? This liquidity run is very high frequency. So whenever we have like a, run of liquidity that lasts more than 15 seconds to a minute for most assets. And this has everything, to do with time, right? Due to the fact that this liquidity run right here, and, you can see my cursor, I'm, talking about the US dollar index right now, right? This happened in literally 2 seconds. This wick formed in 2 seconds. So once the news release happened, this wick formed right here, right? Whenever you see that happen, and then within the euro, we have no type of SMT, and it matters not if it's sequential or not. If we have SMT form with wicks within 1 to 2 seconds, and that's what it is. 2 seconds. It's 1, 2 seconds. Dollar index grabbed liquidity here. Euro failed to do so. British pound failed to do so. Right? Do you see that? So if you go down to your seconds charts, you'll see this right here. This is specifically for really high impact news events, such as what NFP, which usually happens during when? The first week of the month, always happens on the first Friday of the month. When is CPI? The second week of the month, right? Usually happens on either Tuesday or Wednesday. So each high impact news event, and when I say high impact news event, I'm not referencing to just red folders. I'm talking about news events which change the trajectory of the order flow within all asset classes. News events which, give you these types of moves. Is it possible to, catch a, non-farm payroll within 2 to 5 seconds? It is. Can you do it? Of course you can. Right? And by me giving you this information right now, you will see, some of you guys, even the next time we have a certain hyper events catching these moves, and then it'll be like, wow, we catch the wick, we catch a 1 to 2 second candle. It is possible, and you can do it. And I'm giving you what you need to do that right now. Right? So here, let me get the TVC data for the US dollar index. So comparing the US dollar index, right, to, itself, but from another provider, data provider. And listen, they all work together. They're all linked. The reason why we have different data providers for certain assets, can you guess why? They just want it to seem as if, they don't own everything. And of course, capital.com or .com for the US dollar index, it's more accurate due to the fact that it relies on the raw data from the futures market for the US dollar. Right? So here we have capital.com data, and over here to the most left we have the TVC data, the one that ICT usually uses. Whenever we have a difference in either the body of the candle, the size of the candle, the length of the candle, whatever you may call it, the size of the wick, anything, like that. If there's a precision swing point between both of these, and this is important, we will usually have a reversal of price. And this right here will affect the entire market. It's not just the forex market, right? It will have an impact on all markets. Here, you can see that price did not go below this low right here. And remember, this has to happen because this right here, as you can see, is not sequential, right? This low right here is from the first quarter of the week, right? Monday. And this low was Friday, right? This is not sequential, but it is a type of, special SMT. This is due to the fact that we have the farthest quarters from each other within the week, or, I wouldn't call them quarters due to the fact that it's happened on Friday. It's not actually a quarter, right? But the farthest partitions, right? So right now we're going outside of quarterly theory, right? The week comprises of 5 days, right? Quarterly theory stems from Monday to Thursday, but now we are talking about 5 days. And this is what doubling theory is. It stretches the bounds of quarterly theory. It does what quarterly theory can't do, but it does what quarterly theory does do. Right? So the 4 days, right? And, as I said before, within each quarter of the year, there are 13 months. So it will be, a deciding factor there in, a way for us to decide whether we have a high probability cracking correlation or not. Whereas, we would have, for example, a cracking correlation between the first week of the quarter in the 13th week of the quarter, right? And yes, sounds confusing, but eventually we'll get to that. But I don't know why I keep giving extra information which I should not, right? So here, and you can see that, well, you will see that this is, this usually happens on days such as NFP, CPI, and FOMC, right? So here on this candle right here, the candle before, where we have this large expansion, and now I need you guys to be looking at the first chart, which is the US dollar index, and the fourth one, right? Which is also the US dollar index, right? Where we had the expansion candle, you can see that one of them took the low for the capital.com data or capital.com data. The TVC did not. But the candle before that, what happened? What did you see? What was there? There was a precision swing point between the two data providers of the US dollar index. And you got to understand, all of this is controlled, right? All of this data is controlled. It's not separate companies. It's the same person that owns all of these companies. The same group of people that owns everything. Right? And this usually happens within, as I've said before, 1 to 2 seconds. So if you go on your charts and you go down to the seconds, you'll see that literally after 1 to 2 seconds, this wick formed on the capital.com data. It did not form on the TVC data. So after 1 to 2 seconds, you see that wick form. What happens? That is a high frequency trade. Yes, price will reverse. And this is why, let me go here. This is why, remember, last week, what did we expect? First of all, we expected all of this, right? We expected, this right here, and looking at the dollar index right now. Price to go here, reverse, while price was here, we expected price to take this low. Price was consolidating. What usually happens during consolidation? 2 things. We have a accumulation of price, but when is there usually a accumulation of price? Is there another type of correlation that we should learn about? Is there another type, another way to decipher when we will have expansion? Could there be delayed expansion between certain tribes? Yes. Most, importantly, between the Forex tribe and the index futures tribe. So there will be times, right, where you will have, and, this is us, trying to go into the index futures tribes, data. We'll look at that very soon, which is why we're talking about this right now. There'll be times when you will have the FX tribes, consolidating for a few days, or, a few quarters, or a few, partitions of time. And there will be, meanwhile that's happening, so you have the US dollar index, the Euro, USD, and the Great British Pound consolidated. You will have the index futures expanding at the same time, right? This would be seen as delayed trajectory. So the FX triad will usually expand for its next move. And we'll look at that right now. Firstly, I will add the S&P 500 here so you can see, right? So you can see that here, while we had price consolidating, within the FX triad. We had price expanding where? Within the S&P 500, and this, happened within the S&P 500 and NASDAQ and the Dow and even other indices, from different exchanges, right? But for now, we're focusing here, right? And here, where we had the S&P 500 consolidating, what happened? We had the Great British Pound, the Euro, and the US dollar expanding, right? So whenever you see the US dollar or, the Forex trade on a whole, expanding, but the E-mini S&P, the NASDAQ, or the Dow, not, following what that's doing, what can you expect? For the next move, there will be, price doing the opposite in both trades, which is not, going in the opposite direction, but one will be expanding and one will be consolidated. When does that end? That ends when you have price, doing what it's doing right now. So that phase has came to a halt right now. Right now, we have price doing the same thing. We have price doing what it's supposed to do, right? And this is something that usually, confuses people. Why is the US dollar expanding? Why is the euro expanding? The Great British Pound expanding, but, the indices are doing nothing. This is why. And when you understand this, it gets easier. Because now you know that, okay, the next move, I know what to do. Because if the S&P 500 is doing nothing right now, but the Great British Pound is doing something right now, that means that the next move will be a large swing move for the index futures. Do you understand? This has to do with, time on a whole. This is just time. And it is not, specific to quarters right now. It is specific for, partitions of time, which we will get into. But for now, you need to understand this, right? There are times when you have the index futures and the FX triad moving in the same direction, right? That's good. But there are times when they don't do that. But whenever they don't do that, that's the time, those are the times when you should focus on price, because you're really going to get an explosive move in one of two of the asset classes. Right? Delayed expansion. Listen, the normal person cannot comprehend this. I'm telling you. And now, right, let's quickly go over because all of the sauce was dropped right there. And if you can't explain this to someone, literally, I would want to see a new person try to understand this. They can't. It's impossible. You don't know how much experience you have. You don't know. It's you don't really understand, because you think that it's nothing. But try to talk to someone else, you'll blow their minds, man. Literally. They'll be like, really? I can't believe this. What the hell? Literally, that's what it will be like. So here, right, to the left, as usual, we have the S&P 500. In the center, we have the NASDAQ. And way over to the right, we have the Dow. Right? I posted this chart I believe was it yesterday. Yes, I did posted a chart yesterday, right, with the main liquidity pools that we should be focusing on. Someone says, I'm not speaking to anyone about this. Doesn't matter. They won't understand. I promise you. So you can see we have buy side and sell side liquidity labeled. Right over here for the Dow, hopefully you can see these faint gray, lines. This is a imbalance right here. We currently have, high time frame sequential SMT between these three assets. Unless price runs above this high, or these highs, you shouldn't be focused on doing anything, right? We will more than likely have price run above these highs and fall back within the range. That's what I'm actually looking for. We are all-time highs, so price isn't as clear to read as possible, but we can see the weakness in the market, right? We can see that right now due to the fact that the Dow is where it is, right, in discount, right, from this high to this low, the Dow is in discount, and we have the E-mini in premium and the E-mini S&P. So we have the E-mini S&P and the E-mini NASDAQ in premium while the Dow is in discount, right? So this is not high probability conditions at all, but I know that people will trade it and, probably make something from it. But personally, I am not interested until I see, a two-stage sequential SMT. So right now, we already have one stage of sequential SMT, within the yearly cycle. But I would like to see this happen within either the monthly or the weekly cycle, right? This type of price action is is not normal. It's just due to the fact that we have, all of this war news going on. We have countries surrounding countries, we have countries pushing their, vehicles of destruction towards other countries and stuff like that, which is nothing to really worry about, right? It's just, completely normal. This is how humans are. This will forever be happening. And as long as you, keep yourself out of, certain countries, you'll be okay. You'll be fine. So for now on my screen, you can see where buy side liquidity is and where sell side liquidity is. When price runs above either this buy side or below this sell side liquidity, we should expect some form of reversal, which will be evident before the fact by sequential SMT, right? That's what you'll be looking for. Well, if price runs above this high, these highs, or this low. So for now, what are we doing? Sitting on our hands. Is there anything to do? Should I just buy right now? No. Do you see price clear? It's not. It's definitely not. When price was here, now we're looking at the S&P 500. When price was here on the formation of this candle, expected price to go above this high, right? Why was that? And why was it so easy? This is due to the fact that, we were within a range. Here, we're not within a range, right? And we were within a range right here, which was within another range, right? So it was easy for us to expect this expansion. Now, it's not easy to know what to expect, but it's still possible. So I hope that you guys found something useful from this. I think I've been going on for a while. I definitely hope that I recorded this. I think I did. But if not, I'll be upset that I have to do it again. have so much things to do. It's insane, actually. But we get it done. And of course, we will be back this Wednesday at 6 p.m. Eastern Standard Time. Right. So this Wednesday, we will be back and we will be building upon these basic building blocks that we just laid. Right. So again, I hope that you had, a few ideas pop out at you from this stream right now, and we will definitely, be touching upon this information again, because this was just, some building blocks being laid. Right? There hasn't even been, any adhesives placed on the blocks yet, so they're still weak. Right? I'll be back Wednesday, 6 p.m. Eastern Standard Time. So I hope that you guys go over the stream, right? Understand that this is the reason why the markets move. Understand why it's important to be patient. Understand, why some assets expand and why some contract, why some consolidate at the same time. And I wish you, success. I wish that you do what most of you guys, a lot of you guys are doing for anyone that hasn't found their, footing within the industries yet. Some of you, it's purely psychological. Some of you guys, it's not really technical, right? Because some of you guys, you get it, you understand what you're looking for, but you're just afraid. Don't be afraid. And yeah, that's it for now. I will, see you guys, talk to you guys on Wednesday, again, 6 p.m. Eastern Standard Time. And I will post this again for, some of you guys that probably click off the video before it ends, so you don't know. Have a wonderful,